All right, let's talk about something that's absolutely critical for any crypto investor, your exit strategy. We're not just talking about when to sell, but how to sell. We're going to break down a really simple tool that can protect your profits and make sure you actually get the price you're aiming for.
So let me ask you a question, and I bet this sounds familiar. You've been watching your crypto, it finally hits your target price, you quickly hit that sell button, but then you look at your wallet and the final number is, well, it's less than you thought it would be. So what's going on? Where did that money go?
Well, the culprit is usually this silent little profit thief called slippage. It's that super frustrating gap between the price you thought you were getting and the price you actually got. This happens all the time when the market is moving fast or when there just aren't enough buyers and sellers, and it can seriously eat into your gains without you even realizing it.
And this whole slippage problem brings us right to the most common way people sell their crypto, and, how it can actually be a trap.
So, most people use what's called a market order. It's the default on most exchanges. It's super simple. You hit sell, and your order goes through instantly at the best available price. But, and this is a big but, best available might be a lot lower than you think, especially when things are volatile. You're basically trading price control for speed.
Look, on a really small trade, a little slippage might not feel like a huge deal. But when the market is going crazy, or if you're selling a larger amount, that tiny percentage can suddenly become a significant chunk of lost profit. It's like a hidden tax on your success.
But what if you could just get rid of that risk? What if you could be the one to dictate the exact price you get? Well, you can. And that's where the hero of our story comes in. A limit order is your tool for taking back control. Instead of telling the market, hey, sell this now for whatever you'll give me, you're giving a very firm, very clear instruction. Sell this asset only if you can get me this specific price. Or, hey, an even better one.
This slide just lays it out perfectly, doesn't it? A market order is fast, sure, but it's reckless with your money. A limit order, on the other hand, is patient and precise. It puts you back in the driver's seat, letting you decide exactly what your crypto is worth.
So how does it work? It's beautifully simple. First, you decide on your perfect sell price. Second, you just place that limit order on your exchange. And third, you just wait. The system does all the work, automatically executing your trade, but only if and when the market price hits your target. You let the market come to you.
Okay, so using limit orders is great for defense, right? It stops slippage. But this isn't just a defensive move. It's actually a super smart, proactive strategy that gives you some really powerful advantages.
You get 3 huge wins here. First, price certainty. You know the exact price you're going to get, which takes all the emotion and guesswork out of the trade. Second, it's just plain good risk management. You're protecting your money from slippage. And third, it lets you be strategic. You can set up multiple exit points to take profits in a more organized, methodical way. Let's make this super real. Imagine Bitcoin is trading at $38,000. Your analysis says $39,500 is your target. So you set a limit sell order for that exact price. Now you can literally walk away from your computer knowing that your Bitcoin will only sell at your price or better. It will not sell for a single penny less. And this quote just sums up the whole philosophy perfectly. Protect your margins, plan your exits, and let the market come to you. It's all about patience, discipline, and having a plan to protect what you've earned.
So now that we get the what and the why, let's dive into the how. How do you actually use this tool like a professional?
This chart lays out some really solid best practices. First, do set realistic targets. Don't just pick a crazy number hoping to get lucky. And here's a big one. While limit orders protect your profits on the way up, do use stop-loss orders to protect yourself on the way down. You have to manage risk in both directions. And finally, think about staggering your orders. Instead of selling everything all at once, you can set a few different limit orders at different price levels to take profits systematically.
Now, to be totally fair, market orders aren't useless. They have one specific job, getting you out of a position immediately. So if the market is in an absolute free fall and you just need to get out right now at any price, then yeah, speed is all that matters. But let's be real, for 99% of your planned, profitable exits, that's not the scenario you're in. And this all leads us to the final point, and honestly, it might be the most important one. This isn't just about clicking a different button on an exchange. It's about a fundamental shift in how you approach investing.
Here's the crucial takeaway that so many people miss. We spend so much time and energy figuring out when to buy, but very few people have a clear plan for how to sell. Your exit strategy is every
single bit as important as your entry.
At the end of the day, choosing a limit order over a market order is a statement. It says you are operating from a plan, not from an impulse. It's the core discipline that separates seasoned investors from reactive traders.
So, the next time you go to sell, I want you to ask yourself this. Are you just reacting to the market's chaos, or are you executing a well-thought-out plan with discipline and control? The choice and the profit is all yours.